a lot of times when you introspect on what kind of a trader you are, whether you are a new trader or a professional trader, everybody goes through some or the other ways of psychological issues that comes through. It could be revenge trading, it could be FOMO, it could be, over trading. But one thing that I explicitly, when I mentor traders, when I talk to traders, when you're new specifically, you absolutely want to have a technical rule of managing your emotional problems.
Welcome back, everyone. I hope you're doing fine. Today I'm sitting down with Paras Jandwani, a trader I want to bring on a podcast to talk about the skills and the mindset it takes to become consistent in trading. Paras has been through a journey of learning how to trade. It took him 3 years to get profitable. And in this interview, he shares what exactly he did to get to that level and what things he had to change and learn to be able to become consistently profitable. It's a different perspective that I hope you will appreciate and hope you like. At some point, you might hear him talk about how he figured out his strengths and weaknesses and what things he did to get to that level of really using his strength in trading. And we have a free training, which I'll leave the link down below, about how to figure out what your strengths and weaknesses are. And then we'll give you a template to fill this out as well. So check it out. It's going to be linked below, the first link. But I don't want to waste too much of your time. We'll dive right into this interview with Paras Jandwani. Good to have you on the podcast and look forward to talk trading.
Oh, absolutely. And thank you for having me on the first place. Really appreciate it. I've been a follower of this podcast and listen to it quite often. Great value adds, especially in my career as well.
Awesome. So give me a bit of context about kind of what sort of trading you do these days.
So I am I'm a professional momentum-based price action and a tape trader. I'm actively trading in the equities markets and usually rely on the price action as well as the order flow, which is called the tape, to take my decisions on a day-to-day basis, which is basically dominated by the momentum trading strategies.
So take me back and kind of guide us through when you started trading and how did that go for you and kind of what was the journey like of learning to trade?
Well, that's a great question, and like many of the traders I start with, it was a great struggle. It was back. I was always interested in trading. I wouldn't say trading, but in the financial market, and even very early in my when I was even back in school, maybe like seventh or eighth grade, I would basically watch those business news channels and would watch the tickers and their prices that go by like at the bottom of the screen, and then would note them, and then I would basically check them the next day to see what the price was. I had zero idea what those were, but that was where I remember that was the interest that I built into. And then I went into the engineering, and I was doing my engineering, but I was continuing to be very passionate about the financial market. And I'm originally from India, and I was raised in India, and I started doing a lot of certifications on the financial market. Some of them related to banking, some of them related to the stock market. And I did close to 12 or 13 certifications in the NSE, which is the National Stock Exchange in India, and did close to 13 or 14 certifications where I became a level 3 certified. But I had zero idea why I was doing it. I just loved the way uh, things sounded. But when I moved to US back in 2014, that's where I was got exposed to the what active trading looks like, because I was not fairly interested in investing standpoint. I wanted to make it something that is, or can be done on a regular basis, and that's where I was exposed to the active trading and day trading, uh, specifically on a equities standpoint. That's where I was exposed to it. Then I read Andrew's book, something around which came around 2016, 2017. That's what hooked me up. That's where I got a step by step process on what exactly needs to be done. And it was a difficult process overall. It took me 3.5 years to be even consistently profitable. It was a long time. It was a very frustrating time, because when you're passionate about something, when you want to do something, and I come from a very technical software engineering background, and I thought I was smart enough to be able to start making money in the first month or 6 months. But it took me very, very long time. I would say 3.5 years. Very difficult every single day. I wasn't blowing up my accounts, but I was taking those small hits which end of the day added up. and ended up, after commissions and everything, I was losing money. So yeah, that's where it started. But eventually, the I wouldn't say there was an aha moment for me, where it's a process of being in this career and you start learning from all the mistakes that you're going through. But one thing that absolutely I would credit to on my career, or which was a game changing edge that I call it, which is called as a tape. And I got exposed to tape uh, close to after 2 years or 3 years into trading, and that's where I started reading things that were going in front of me, and I started enhancing that skill set, which actually I would give as a credit to the tape reading perspective that made me consistently profitable. And I wouldn't like, one of the things that I avoid saying consistent, because you're one trade away from so you have to be very cautious when you say consistent. I'm consistent so far, but you always want to be on the a very cautious mindset that the next day could lead to a completely different mindset altogether. So yes, it took me 3.5 years to lead consistency, and price action and tape reading was one of those areas that I would gave me that consistent edge in the markets.
I'll get that mindset later. I think we can definitely talk about this a lot. But regarding tape, a lot of traders see this as a complex, or it's hard to figure out, or they don't know what to look for. Walk us through how tape reading works and kind of what things you look at.
Oh, absolutely. So that's again a very good question. One of the things people find it very difficult to understand. First of all, tape has been there since the 1800s, and US is one of the only markets that actually the NYSE and the Nasdaq, they share the order flow with the. Initially, it was there with the prop firms. Now, the order flow is available to the retail traders as well. Not every market shares it. And what is tape? What does tape include? One is what you call as the order flow, which is also called as a time and sales data, where it is showcasing what time the order was executed and where the buyers and seller actually met and it was actually executed. So that's the order flow that passes through. And the second thing that comes under the tape, which is the level two data, which is the order depth on the market, where there are buyers and sellers. They haven't been matched yet, but they're waiting in the queue for their orders to be filled. So those are two data that is provided by the NYSE and the Nasdaq for us to view it and interpret it. One thing that you want to understand is the time and sales data does not lie. And why it doesn't lie? Because these are like real orders that are actually have to pass through. You cannot hide them. If there is a transaction that is happening, it has to pass through the time and sales. The level two data can be you can put a data in, you can remove the data in, out, and that's how it works. But the time and sales is basically a data that does not lie. And it is all about the mindset with which the transactions are happening. And there's a lot of, when you see the time and sales data, it would have a lot of red prints, green prints, different color prints, the way you configure it. There are white prints that passes through, and each color has their own significance. A red print does not mean a sell, and a green print does not mean a buy. It's the way the psychology of the market is interacting, is with which that you can interpret if it's a bullish way, if the stock where the buyers are stepping in, and how the buyers are absorbing the selling pressure and are they stepping up, or is the sellers more dominating and are they stepping down. It's basically trying to understand the heartbeat of the market by analyzing those real order flow and interpret it in a much better way to in a very short time frame, that if the price is going to go up, or if it's going to go down. And that's the bigger picture. There's a lot of concepts on understanding the order flow that you can apply on a daily basis, and 70 to 80% of conviction you can get it if the price is going to go higher or lower at that particular instance.
The data you get from tape reading, how long does that last? Is it good for like the next 2-3 minutes, or is it good for like a whole day, or what kind of information do you get from that?
Again, very good question. So When the tape reading is basically understanding the mindset which the buyers and sellers are interacting. If you can identify an algorithm that is printing 5,000 shares on the time and sales over and over again, and you would try to identify which there are multiple algorithms that are trading in the market, and there's only specific ways a big player would interact on a stock. If there's an algorithm in place, there would be specific ways. All you're trying to identify is on the tape what kind of a pattern the buyer is there. Sometimes when you are trading on a momentum, when there's a news, there would be a different type of a pattern that you would see on the tape, versus when there is a all day buyer, you will see a different kind of a pattern. You'll see, a big push to the upside, a momentum on the upside, then holding, the buyer stepping higher. And that's where you're understanding to try and understand what prices the buyer is trying to step up, and then if it breaks out, how, where is another buyer stepping up. The best thing that the tape gives you is that it gives you the way to identify the best entries and exits possible, because you can, with real time possibility or real time interaction with where the buyers are buying it and where the sellers are selling it, you can time your entries and exits really well. And in the community, in the chat room, I do share my screen, I trade live with traders, and I show them on how it is possible. And you do this day in and day out, and there's a lot of value when you are able to identify, not just blindly looking at a pattern and looking at a setup on and waiting for it, for the target to hit, but actually managing your positions really well, like scaling into the positions when you see buyers coming in, and scaling out of the positions when you think that the price is stalling and the sellers are taking over.
Does tape reading automatically brings in more discretion, or can you be very systematic and very kind of have clear rules and very clear about it?
A very good question again. I think there has both of these possibilities, but there is so much of data and patterns is there, and you don't know when the new order flow, the new buyers come in. So I think it helps more of a discretionary way of trading than the automated way, because you don't know when the systematic way of trading, where you don't know when the new volume or the new price comes in. But when you're watching that particular stock, when you're seeing where the buyers and the volume is increasing and the acceleration on the tape increases, that's where you can, there's a lot of ways you can identify it on a discretionary standpoint. And that's why it's very much necessary, and that's why it's not cannot be completely automated, or cannot be completely systematic way of looking at it. And you have to take decisions as and when you see the data coming in and coming out of those trades. So it's difficult to systemize it, but discretionary, it helps the discretionary traders to add to their edge and add to your risk reward for your trading.
I want to go back to that mindset you talked about earlier. You mentioned that you always want to trade away from non-consistency. Basically, you can always go back to being not consistent and kind of falling down that trap. Walk me through how you kind of see this and how you see consistency in trading, and how do you maintain it?
There are multiple ways to be consistent. Well, there are multiple. First of all, you identify your edge, and that's a lot of traders. They have a process based, or a growth minded process, where they're creating their playbook, they're creating their setup, they're creating their patterns, but it still might not lead to consistency. A consistency, they might be have a very much bigger win rate, they might have a better risk reward, and everything comes to an endpoint of risk management. You could be the best trader, but if you're not managing your risk well, you would end up 1 or 2 days you are consistent for the past a month or two, and one day you would just blow up, and just give back your months of profits. And has happened to so many people I work with, has happened to me, where I haven't been I have been consistently making money, and one day I just completely give back weeks and months of profit. And the way you want to systemize that as a discretionary trader, or as a discretionary retail trader, is by setting some technical rules around it. Because a lot of times when you introspect on what kind of a trader you are, whether you are a new trader or a professional trader, everybody goes through some or the other ways of psychological issues that comes through. It could be revenge trading, it could be FOMO, it could be over trading. But one thing that I explicitly, when I mentor traders, when I talk to traders, when you're new specifically, you absolutely want to have a technical rule of managing your emotional problems. And when I say that, a lot of people say that I'm struggling with the psychology, and I'm struggling with the FOMO, I'm struggling with revenge trading, I'm struggling with impulse trading. But the the root cause of those emotional issues can be handled in a technical manner. For example, let us say that you're struggling with overtrading. You're struggling with not taking those playbook trades that you should be taking. What is the technical way of, and you could say, maybe I should take less trades, or maybe I should uh, manage my positions well to be able to take less trades, or maybe should work on the psychology, and maybe I should not be frustrated. And those are all good stuff, but they're not actionable stuff. And what is the actionable stuff? The actionable stuff should be, okay, maybe I'm a momentum trader. At an average, a good trading for me, 8 to 10 trades on a daily. If I'm taking more than 10 trades, my risk or my performance hasn't been great. So go to your software, go to your broker, and ask them to stop your trading by if you hit 10 trades per day, or maybe 8 trades per day. And that's a technical way of stopping yourself, that you whatever trades you would be taking in your head or a subconscious mind, you would be questioning yourself that, is this trade worth taking it, because I only have limited numbers to work upon. Same thing with revenge trading, finding a technical way to handle it, and also not that blowing up your account. Having It's very simple way of managing it, or having a technical way of handling it, is that having a max loss set up. You are logged out of the system when you hit your max loss. There is no question asked. Come back tomorrow, and then come back again, and you should be able to trade another day and not blow up your account. And that's the whole thing. If you cannot manage your emotions enough to be able to take decisions by yourself, have a hard stop for yourself to do it for you. And you would be thankful for those hard stops, because in the prop firms, that's exactly what's happening. There is a risk manager sitting behind you, watching you trade. And if you are not in the right frame of mind, the manager is going to ask you, and ask you to step away and not be done for the day, and you're locked out of it. And as a retail trader, you can do the exact same thing for yourself. And that's the first suggestion that I would give, that if you want to be consistent, have a technical rule behind all the psychological issues you're facing. And once you have that, eventually you'll start seeing those small ads would actually start making an exponential difference.
What would you tell the traders who don't lose big amounts, but they lose like small chunk consistently? Maybe there was like you back in the day, like you lose small parts of your account, no big losses, no kind of big blowing up, but keep losing over time. What would we tell them to focus on to fix that?
Take less number of trades. Process your playbook. I think a lot of the root cause for me specifically, when I was going through this, where I was like taking those random trades which I should not be taking, or maybe you make up those trades saying that, oh, this looks perfectly as in setup, but looking back, it wasn't your setup. So you have to refine, create a structure of what kind of uh, trader you want to be. You want to be a momentum trader, you want to be a trend trader, you want to be a counter trend trader. You want to define your or create your identity for yourself on what kind of a trader matches your nature, and then refine your playbook to an extent that, and categorize them into your A plus A, B plus B setups. And if you don't see those, the more you refine it, the less you will trade it. And the less you would trade it, it would be, you will not be taking small cuts. And one thing that I would highly recommend is trade less, but trade big. So take less number of trades, but the trades you take, be confident enough to be able to scale into the position on those setups.
How do you get to that point? I feel like a lot of people have issues scaling into trades. When they see a trade working out, they say, oh, if I add in now, then it's probably going to be too late. Then they don't want to scale into it. How do you get comfortable with that?
More and more screen time on the playbooks that if you are struggling to identify, okay, if this is your setup or if this is not my setup, I think the reviewing of your charts daily and annotating them on the exact playbook setup that you have defined for yourself. So if let us say you have defined a playbook setup A, this is your playbook A, look for the exact playbook setup that worked out in the stocks that you were interested today and annotate them on a daily basis. And in just a matter of like maybe few weeks, you would not question yourself because the subconscious mind is trained enough to see that pattern so much that you won't be questioning yourself that should I take this trade or not, because you know on the back of your head that I've seen that setup so much that this is your trade. And you would have the enough conviction to get into that, because a lot of times traders struggle because they're not confident enough, or they have not defined their playbook that rigorously, that they think it is their setup, they might not think it's in their setup, and that's why they lack quick decision making on the setups then when they see it.
Anything else we didn't cover or touch on that you wanna mention here? Any other advice you feel like traders should hear?
I think one of the things I would definitely mention, two things actually. One thing, have a realistic expectation in the world of trading. For all the retail traders out there, there's um, so much out there in the social media claiming that 1 month or 2 weeks. Consider trade it as a career, not as a gambling mindset, but as a normal engineering, or when you go to a med school or when you go to an engineering school, it takes around 3 to 4 years for of your time to be able to start reaping those benefits of the work that you're doing. Have some realistic expectation on what on when you will start making money, because trade it as a career and not as a gambler. There's a very thin gray line between a gambling mindset versus a trading mindset. And secondly, I would highly recommend understand what kind of a person, explore all the areas, explore all the futures, options, equities, all the different ways, swing trading, day trading, when you're starting as a new in your career. But refine yourself and see what your as a human, as a what nature suits you best. For example, I am a very impatient trader, and but I'm good with reflexes. I'm good with I can take decisions quickly, but I struggle with being patient. I cannot hold on to a position for a big move and just sit back and just rely on the stock to move in my favor. So for me, uh, momentum trading and scaling into the position, managing those positions, actively make much more sense for me, because I can, you know, uh, take some quick decisions to get out and get back in, and then scale into the position and keep those P&L register ringing over and over. Again, every single person is different. You want to understand who are you and what makes more sense to you. There are n number of ways of making money in the market. uh, you want to find one that matches your strengths and matches your personality. If it matches your personality, then you will the probability of you winning in the career of trading is very high. I come from a very a professional. I played professionally a sports called badminton, and that also required a lot of quick reflexes, which is why I think my nature has turned out in that way, where my strengths are based on quick movements, based on the momentum, and then scaling in and scaling out of the positions actively as an active day trading standpoint. So those are those two things that I would highly recommend, that have some realistic expectations, and understand your personality and trade your strengths.
Interesting. How do you figure out someone's strength in trading? Is it through trial and error? Like, have you had someone point this out to you, or did you experiment and try things out and then understood what you're good at?
Again, very good question. There are multiple ways to figure it out. First of all, you would internally you would know, are you a quick decision maker? It's very simple. Are you able to, okay, this is good, or forget about trading. Let's look at when there is a certain situation that comes into your favor. What do you do? Do you stay back and take some time to interpret the data, take a very conscious decisions maybe a day later or something? or are you a quick decision maker? Are you like when it comes to traveling, do you like to wait, hold, see, take some time to finalize, and then take those travel decisions, or do you just take those travel decisions quickly and see what happens? A lot of ways have to do with, and now when you compare it with the with trading, when you get into a position, what kind of a feeling do you get? Do you feel that, okay, this is my target, I want to hold it to that target point, or do you think that let me, if, are you patient enough to hold to the target? If you, are you patient enough, or are you impatient enough to not hold to the target? You would try to find that SWOT analysis, what your strengths and weaknesses are, and then see where do you fit in the market. There are a lot of play people who do not want to get stressed about on very quick movements up and down. They can be a very very bad day traders, but they can be a very very good swing traders, or play through options on those points. Or some people I've seen, they're really shitty at day trading or momentum trading and even swing trading, but they're really good at income trading, where they play with condors and they play with butterflies and they strategize out, and some of them are really systematic in their ways. So it's an individual journey of identifying what makes more sense to you and what excites you. What are the things that would excite you and also keep you going to improve on a day-to-day basis?
I totally agree with that. That's a good point. Tell me where people can find you and connect with you after this podcast.
I am available on X or Twitter, which is Paras Jandwani, is my Twitter X handle. And I have a tape reading course, which is available on tradingterminal.com. It's tape reading is usually you need videos to be able to showcase all those concepts on how to read those order flow, how to read the level 2 depth. And there are a lot of concepts which is unfortunately is not available to the retail traders. It was always limited to the prop trading firms or the hedge funds, and that's what actually motivated me to create a course to be able to showcase what those skills are. And I always check that out on tradingterminal.com under academy, and I'm a part of Babel Traders community. And if anybody wants to be a part of that, we're most welcome on that as well.
So I hope you liked it. Definitely a lot of good advice in this interview about the skills you need, the mindset that you have to follow to become consistent. And remember, it's good advice here. You always want to trade away from non-consistency, which is very important to remember. If you want to figure out your strengths and weaknesses, check out the first link below. It's going to be a template with the private lesson on how to do that, how to pinpoint what you're good at, how to pinpoint what things you got to work on, and so on. Links will be below also to connect with Paras. And if you want to check out his tape reading, you can just check it out right there. And I'll catch you back here in the next interview pretty soon. Ciao.